All right. So I know my course I've done what support and resistance, trend lines. I actually gotta look and see what I've done. But I know for a fact I haven't done a video over time frame. So I'm like, cause now that I think about it, I'm teaching y'all, support and resistance trend lines, but like I'm not showing y'all which time frames to draw these on, right? Like all this stuff you can do on any time frame, but like just from a new trader perspective, right? If you're new to the market, right, you have to look at the higher time frames first. Higher time frames hold more power. Like I can't stress that enough. But they move slower too, right? The higher time frames are more cleaner than the lower time frames because they hold less data. So it's the same data, it's just more. It's pretty much, I was saying less is more. That's pretty much the higher time frames, right? If you go down to like the 1 minute, right? So look right now on Shopify. I'm on a 1 minute time frame, right? The market is open 6.5 hours a day, right? Every minute a candle gets formed. Every minute, right? You will see a candle on the screen, right? The raw data. So every minute on the 1 minute time frame, right, is a candle. See at 8:30, 8:31, 8:32, right? Let's go to 5 minute. Every 5 minutes you get a candle, but you see how the candles condense. The higher you go, they get bigger and more compressed, right? That's the 5 minute. Let's go to the 15 minute, right? And you know what, I'm gonna just do this so that way y'all can see what I'm talking about. Just this box, and y'all see these candles. So this is the 15-minute time frame, right? Here's the 1 minute, 1 minute, right? All these make up that box. Let's go to the 15-minute time frame. Same box, right? Do you see what I mean? Then from here, all right, zoom in more. Okay, let's go to the 30 minute. Same box, right? But you see how the candles, right? They get more condensed. Let's go to the 1 hour. Same box. Let's go to the 4 hour. Same box. Less candles. You see what I mean? Let's go to the daily. Same box. Less candles. Now let's go to weekly. Same box. Half of these candles and this middle candle. But do you see what I mean? The higher you go, the less candles, but price moves slower. It takes longer for that candle to form, right? The higher time frames tell you where price wants to go. The lower time frames, you're just looking to get an entry, right? And a tool that's going to help you is the strat tool right here. It's the strat assistant FTC. What's it at? So it is right here by Ricky Caro. But anyways, all it does is it puts the time frames at the bottom. So you see my time frames at the top here, they're all at the bottom. So I know if the 4 hour and daily are green, if the 4 hour daily and weekly are green, if 15 minute, 30 minute, and 1 hour are red, that means the higher time frames are bullish, but the lower time frames are pulling back. So what's going on in the lower time frame? They're either retracing to a level or they're making a higher low, right? In order to make a higher high, you have to make a higher low first, right? And if you want to make a higher low, that means price has to pull back on the lower time frames so that for you to make that higher low. Hence, these wicks are just higher are just lows on the lower time frame, right? They're candles, right? Wicks on higher time frames are just candlesticks on lower time frames, right? So now, when you're doing your markup, you don't need to start on a 6 month. You don't need to start on a 3 month. You don't need to start a 2 month. You don't even need to start on the monthly. If you're a day trader, so a pure day trader means you're buying and selling the same day. There are people who call themselves a day trader and they swing it. Like, you're not a full day, a day trader means you are buying that session and you are selling at the end of that session. You're not holding overnight, not holding for a swing, because at that point, you're a swing trader, right? So always start on the weekly time frame, right? So always mark out the weekly high. You don't always have to mark it out, but it's best to see, okay, here's the weekly high, here's the weekly low, right? Like ask yourself, like, where's price at? Where are we trading on the weekly time frame? And then just look at the candlestick. So on Shopify, right? Bullish, do we have this doji candle earnings? This bullish candle, we had this hammer candle, right? And what happened? We engulfed that hammer candle. So just knowing that we engulfed this, right? Let's go to the daily time frame. So as of right now, just based off these two sticks, we look bullish. But with everything going on with the market, with war and stuff, let's see what's going on in the lower time frame. See how this weekly is green, but all of the other time frames are red. So this next weekly open is going to determine if price is going to continue the trend or if we're going to pull back. And then what you can do too on the weekly stick, you can draw a fib from the low to high and mark out the halfway point. So half of this candle is 124.20. So minimum if we pull back, we're looking at 124.20 because that is the 50% of the weekly candle. Or even if you don't want to do that, you can just draw a box around it, spread this out, then watch what I'm gonna do right here. Here's the midpoint line. So in case you don't want to drive flip. So just based off the weekly, do that box. Let's go down to the daily time frame, right? So based off that box, right? Let's go back to the weekly. I drew this box from the wick low to the wick high. Let's go to the daily time frame. Here's the high. What happens to the next daily candle? It's a doji candle, right? Doji means, so the color doesn't matter if it's bearish or doji candle, if it's bullet, it doesn't matter. A doji candle just means like the market doesn't know what to do, who's in control, bulls or bears. Like, so it was a battle, right? Bulls push price up to 135, then bears push price back down to 128, and it closed at 130. So what this is telling me, just based off the weekly, right? 124. But looking at a daily time frame, we're looking bearish, right? Because this is a bearish candle for earnings, right? Did price break above this? Did price close above this bearish pressure? No, we didn't break above 139, right? We're still trading this bearish candle. So what that's telling me is just based off this current daily stick right here, this trade looks real easy. If we break under 128.01, we are looking at 124 minimum, right? Because if this is a doji candle by definition, this next daily candle that opens, it should break either way. So we know for a fact if it points to the downside and if it pierces under 128.01, then price should go to at least 124 because that is the 50% of that last week candle. Then if we break under 124, the low of that is 112, right? Do you see how I'm trying to click things, how I'm using the higher time frames to form my lower time frame bias, right? And I only got this just based off two time frames, off the weekly and daily, right? I haven't gone down to the 4 hour yet. So just based off this daily stick, if this next candle opens bearish and starts to push down and starts to fill this wick and we break under, yeah, I'm looking at 124. Because this is three rising soldiers right here. 1, 2, 3. So yeah. And then you can also make this a zone from this low of this stick to this wick. So pretty much this small zone right here would have to break for you to go short. And then you're what? You risk like $1 for 4, or even lower. You can take this to this wick, honestly. Because I'm pretty sure if it breaks 124, it's gonna keep going. So at least to 121. Then just now let's go to the 4 hour. On the 4 hour time frame, that doji stick, you see it better now. Look, this 4 hour, it broke under this, right? So they're just telling me like, hey, we have a wick to fill at 128. If we break under 128, you see all the space we have to fill, right? The market doesn't like space like this, right? So what I mean by is, you see this big stick right here? What happened? This bearish stick came and filled this big stick. Look at these sticks right here. Are there any candles to the right that has filled these three candles? No. So what goes up must come down. Then if I were to draw a fib, low to high up here, minimum 121.43, and that aligns with the break of this candle right here at 121.5. So do you see what I mean? Like I'm just using the past data to form my present bias. I'm using the past to form the present because the past, present, future, they're all like one. But that's a whole rabbit hole, like quantum mechanics, all that. Like that's a whole rabbit hole. But anyways, just off the 4 hour, right? Under 128, 124, 121, and then let's go to the 1 hour time frame. This 1 hour time frame too. Look, fill this gap up here, right? And always mark out your gaps, right? Anytime you see a gap, whether it's filled or not filled, always mark them out because gaps will always get tested in the market. Even right here, see this tiny gap right here? I know in the future, if we bottom out, right? If we get this pullback and bottom out, we're going up to 142 and we have a gap up here at 154. So I know for a fact that once bulls start to take back that pressure on Shopify, it's going to fill these two gaps up here. But as of right now, just looking at current price action, it looks like price wants to pull back to 124 and fill this bullish candle right here. And there's volume behind this bullish candle. But the break would be this doji stick, right? Because you see this doji candle, what happened? Went up to this gap, and then what happened? Wick the top, then price reversed to the downside. The fact that we let sit a wick up here, then close under, and this next candle close under this current candle, yes, I can see 128, then under 128, 124, 121 minimum. And then from here, you go to the 30-minute and you look for your entries on the 30-minute or on the 15-minute. So pretty much, you don't need a lot of time frames, right? So the way I choose my time frames, right? I base my time frames off of the past traders. So like the person who made the Japanese candlesticks, right? Mushima Hamata. I forgot his name. I don't know. I didn't say his name right, but he made over like $10 billion, right? He traded the succession, right? Because back then day you're trading rice cakes. You're trading rice. You're not trading rice every minute, right? There's an open price to the rice. There's a high price to the rice. There's a low and there's a close. So he would mark out the open, high, low, close, and that's how he made a candlestick, right? So, and he would trade, his trades would be based off of the closing price, I think, and the open price. Because where price close matters and where price opens matter. If we open above a close, and if we hold under that close, then price has no choice but to go up. Versus if we open under a close, right, and fail to break back above that close, then price has no choice but to go down. It's hard to explain, but like once you honestly just watch price, then you see what I'm talking about. But honestly, for day traders, honestly for your buyers, I'm gonna get rid of the 2 month, 3 month because this month I'm truly gonna figure out what I mean. So I'm just gonna focus on these time frames right here: a monthly, weekly, daily, 4 hour, 30 minute, 15 minute. Why these time frames? Two 15-minute candles make up one 30-minute candle. I guess I could add on a 1 hour if I wanted to. Because one hour candle, yeah. So two of these make up a 30-minute, two 30s make up a 1 hour, four 1 hour candles make up the 4 hour, you know, And then from here, I think two 4-hour candles are a session. Yeah. But pretty much for your bias, gauge the weekly time frame. Either draw a box or draw the 50% for the last weekly candle, and then from there, just go to the daily time frame. Because if you're a day trader, you're trading like the whole session. So you have to look at the daily time frame if you're a day trader. Like it's in the name, day trader, daily time frame. Like you're not called a week trader, right? Or a 4-hour trader. You're a day trader. So you have to look at the daily time frame for your overall bias. So like truth be told, you don't even have to start on the weekly if you don't want to, but it's best to do because you always want to gauge the higher time frame. But when you mark your highs and lows, your levels, use the daily time frame. Like truth be told, for the weekly time frame, just mark out the last weekly high and low, and then pretty much once you go down to the daily time frame, you're just looking, okay. So are these levels valid, right? If price does pull back, where can price pull back to which candle, right? And then like the 4 hour, 1 hour is for like is to see like the overall trend. Like is price making higher lows, higher highs? Are we making lower highs and lower lows? Right? Stuff like that. And then for entries, right? I don't trade the first 30 minutes. So don't trade the first 30 minutes. You will always get an entry. Like if you're trading the first 30 minutes, you're either gonna scalp or you're gonna scalp. Because a lot of day traders, right? You get in entitled inducements. But you see right here, for example, on Shopify, right? The first 30 minutes. Here's 8:30, here's 9 o'clock. What happened? Two bearish candles. So how many people think went short? They saw this candle, this doji stick, this next candle was a bearish stick, right? So they assumed just because we have a doji stick, this is a bearish stick, and we're filling this candle, it's time to go short. But if you look at what price did, we gapped down, we left a gap to the upside. So if price rebounds as we close above this bearish candle, what's going to happen? Price has no choice but to reverse to the upside. And you see what time it reversed at 10 o'clock, right? 9:30, right? This was the sign that, hey, we're not going anywhere. Bulls are still here. Then what happened at 10 o'clock? We engulfed these three candles. Then what happened? Keep going. Do you see why I don't trade the first 30 minutes or even the first hour? Like you will always find an entry. So the sweet spot is between 9 and 11. I say the minimum 11:30, but I like to use the 30-minute time frame for my entries. If I want to be super super precise, then I can go down to the 15-minute time frame. Because look, the low was put in at 9:15 with this hammer candle, and this hammer candle had the same volume as this bearish stick, right? And the same volume at this 9:30 stick. So what is that telling you just based off the volume? Like, hey, someone is buying at these lows. Then what happened? We took off. But you see what I mean? Like time frames don't you don't need a lot of time frames. But this tool at the bottom is gonna help you out because you want to get in where they align, or like I said, if your higher time frames are green, if your lower time frames are bearish, but if you know the trend on a daily and weekly time frame is going to the upside, is bullish, then you are looking to get in on that lower time frame retracement. Because that lower time frame retracement on the 15-minute and 30-minute is a 4-hour wick, right? Is a 4-hour wick or a wick on a 1 hour, but most of the time it's a 4-hour wick. But with that being said, I'll see y'all in the next video.